Edward Brown, host of The Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. Our guest is going to be Zach Oliva. You're not going to want to miss this show. That's The Best of Investing on Saturday at 8 p.m. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme, miscellaneous trivia. Do want to make a mention also for Pacific Private Money's Arrival Fund. Still paying 10%, limited time only though. So you got to check them out at pacificprivatemoney.com. Let them know that you heard about them on the radio show, The Best of Investing. What they do is they buy or they fund first deeds of trust, and then they package them up and sell them to an already positioned buyer. So it's money that gets put on the conveyor belt and just keeps rolling along, and they're able to pay the clients 10%. So again, check them out, pacificprivatemoney.com, and ask about their arrival fund. Tell them that you heard about it on The Best of Investing. Also, when we get to our guest here, I do want to make a mention here also for Delaware is losing lots of money due to corporations fleeing to other states. Apparently, Musk was granted a $56 billion comp package twice that was approved by shareholders, and had some judge decide to deny it, which is kind of strange why a judge gets involved with a corporation's decisions on its shareholders, and maybe we'll ask our guest on that. So we do have a guest, Ruben Izgelov of We Lend LLC. I'm going to read a little bit about Ruben here. He's a seasoned real estate entrepreneur with over a decade of experience in acquiring, flipping, and developing and financing over $500 million in real estate. As the co-founder and managing partner of States Capital, a private real estate debt fund, and We Lend, a tech-driven private lending platform, he has reshaped real estate financing for investors across the nation. His expertise spans real estate-backed lending, passive investment strategies, and market insights, making him a sought-after speaker and thought leader. Ruben's journey, shaped navigating the 2008 financial crisis, has given him a deep understanding of market cycles and how investors can capitalize on real estate without the risk of direct ownership. I know a little bit about that. Hey, Ruben, welcome to The Best of Investing.
I appreciate it, Edward. I got to figure something out to actually shorten that bio because it's getting longer and longer every single year.
Oh, yeah, I know. It's funny. I've had to send my bio out. It's like 2 pages. I'm trying to squeeze it in on. All right, so now let's get right into our questions here. So
Sure.
What is the difference between a real estate syndication and a private debt fund like We Lend Fund?
It's a great question, and I think there's a lot of good benefits to a real estate syndication versus a debt fund, and of course there's other benefits to a debt fund versus a real estate syndication. Some of the benefits that I think are very noteworthy is the fact that a debt fund is liquid. In other words, the lockup period of your investment is short-lived. It's only about 12 months versus a syndication, which can vary from anywhere between 3 to 5 years. In addition to that, the cash flows in a debt fund are instantaneous, right? Most of our investors, within about 45 to 50 days of their investment, start receiving cash flows directly deposited into their bank account without having the headaches of being a landlord, right? You are a lender, so as a result, you're getting cash flow every single month. In addition to that, it's predictable and it's consistent. You know exactly what you're earning. You know exactly what the yield is. You know exactly when you're going to be earning it, because as the borrowers are paying us, we're paying our investors. Also, the investment period is very, very short, which basically means that your market exposure is limited, right? You're not in a deal for 3 to 5 years, and there's a lot that can happen in that 3 to 5 year period. But most importantly, you're able to hit diversification. And what that essentially means is that your investment is diversified amongst a number of different asset classes, a number of different borrowers, in a number of different geolocations versus having to be invested into one single fund.
Right. We're going to get into the type of assets that you're lending. Very similar to Pacific Private Money is, I'm guessing, ahead of time. Okay, here's our first trivia question. All right. And again, reminder, Ruben, if you know the answer, don't say anything quite yet. What luxury brand has a gold crown as its logo? Call 888-912-1190. First caller with the correct answer wins that tanning certificate, which, by the way, is worth over $100. What luxury brand has a gold crown as its logo? All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Yo. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with my special guest, Ruben Izgelov. First trivia question. What luxury brand has a gold crown as its logo? Do you know the answer, Ruben?
I know Budweiser has a gold crown, does it?
That I wouldn't
Rolex does
consider
as
that.
well. I think Rolex does as well. It might,
Rolex. Yeah, very, very good. Rolex. That's the answer. Very good.
Love it.
I do want to make a mention here before we get started. Also, for over 30 years, SF Bay Adventures has been the premier boating event and tour resource for the San Francisco Bay for private events such as birthdays, weddings, and other events. Smaller groups or individuals can also buy tickets to public tours, such as the Sunday morning wildlife sales under the Golden Gate Bridge. Visit sfbayadventures.com or email info@sfbayadventures.com to book your adventure. All right, Ruben, we're talking about debt funds here. What type of assets are you lending, both residential and commercial? Are they owner occupied? Are they consumer bridge loans? What assets are you lending?
So we are essentially private lenders. We only lend to real estate operators and investors nationwide. Since inception, we originated about $700 million across about 1,400 loans with zero principal loss. And one of the reasons to that is mainly because of the natural kind of position of the investment when investing into a debt fund. You're the last one into the deal, but you're the first one out, which means that it's a much safer part of the capital stack. So before anyone takes out a penny out of their money, out of their investment, you as a lender are always repaid first. So there's a lot of safety involved in investing into a debt fund. Today, our focus really is 1 to 4 unit multifamily and mixed use properties. And even on the mixed use properties, we always want to see at least 51% of the property being residential, at least residential units in scope. And the main reason for that is because we feel and we are very bullish on residential, right? There is a huge deficit of supply. We can't build enough homes. We can't build enough roofs for people to really lay their heads on. So I think for us, the focus is always residential because, other asset classes such as, warehouses, industrial, office, retail, and so on, there's just so much market volatility that we as lenders who are personally invested alongside our investors never want to get caught in.
Right, and I've always said that everybody needs a place to live.
Totally.
Like I typically said this on the show. I said, we may, like in my personal life, we may have to downsize, but my wife's not going to let us live in a tent. So, for our standard of living, but we have to live somewhere where
Totally.
office buildings happen with that. What's the highest LTV you guys go to?
So it depends on the borrower's experience, right? We're very driven on borrower experience and operations. Today, a good 70% of our borrowers are actually returning borrowers. We've seen their execution. We know what they're doing, how they're doing, and so on. We've verified their experience. But nevertheless, we will fund up to 90% of the borrower's purchase price and 100% of their construction with a maximum of about 65% of the properties after repair value. Today, if you look at our portfolio as a whole, we're at about 80% leverage against the purchase price, and also about 58% leverage against the property's future after repair value, which means that tomorrow, once the property has been stabilized and repositioned physically, financially, there's about 42% of equity built into the deal, which puts us in a very, very safe position. Now,
you're only going to be lending the construction part as it goes, rather than just writing them a check and hoping they build it. I get it.
You hit it right on the head.
Yeah, what interest rate are you charging your borrowers typically?
So it depends. Today, we're anywhere between, I would say, 10.5 to about 11.5%. But if you look at our portfolio today, it's right around, I would say, 11.5%.
Okay. And how many points do you charge the borrower?
So it depends also on the borrower's experience. It depends on how much deal we have. But usually we charge about 2 points. Sometimes we'll do 1 point. Sometimes we'll do 1 point in, 1 point out. We really try to be flexible. We're really trying to work with operators who are full-time real estate investors.
Okay. And are you nationwide?
We are. We operate in about 46 states. I think there's only about a few states that we don't operate in because of the licensing requirements, but 46 states that we're operating in today.
How long has WeLend been in business?
Good question. So the operators, myself included, we were buying, selling, flipping, developing real estate since probably, I would say 2010, 2011. And then coincidentally, in 2018, we kind of came across the debt space. So we've been, around since 2018. So it's been about 7 years now. Since then, we originated, like I mentioned earlier, 700 million across about 1,400 loans with zero principal loss. Very hard to come by.
Gotcha. Okay. And how large is your fund?
Today, we probably have about, I want to say, a little over $100 million of assets, all in. So, thankfully we're growing. I think we can be a lot larger. We should be a lot larger. We are in
Yep.
talk with a number of groups to be able to bring in more of an institutional capital. There's a lot of due diligence involved in that. They're looking through every single corner. They're looking through every single document, crossing every T, dotting every I, just like we would in our
But
underwriting.
100 million in assets, is that 100 million of investor capital from
No,
Mr.
that's between warehouse, that's between our credit lines along with our investor capital.
So how much investors' money
So I
from?
believe it's right under 20 million, give or take. And with
Okay,
our capacity today to be able to fund and ultimately sell our loans, that's really all that we need.
gotcha. Okay, well, let's cut to another break here because it's very interesting topics we're talking because obviously I'm familiar with this stuff.
Yeah.
All right, here's our second trivia question. And again, just a reminder, Ruben, if you know the answer, don't say anything quite yet. What common spice is actually a hallucinogen? That's our trivia question. Call 888-912-1190. First caller with correct answer wins that tanning certificate from Tambella Tanning Salon with 2 locations in San Francisco and 1 in Marin. What common spice is actually a hallucinogen? I have to remind my wife not to put too much of that in my food, All right, call 888-912-1190. First caller with correct answer wins that tanning certificate. Stay with us. You're listening to The Best of Investing. I'm Edward Brown, your host, with my special guest, Ruben Izgelov. Don't touch that dial. Welcome back to The Best of Investing. I'm Edward Brown, along with Ruben Izgelov, my special guest. Second trivia question. What common spice is actually a hallucinogen? Do you know that, Ruben?
No idea. Yeah. What is it?
Nutmeg. I guess
Nutmeg.
isn't nutmeg and eggnog, around Christmas time?
Makes
That's why
sense.
everyone's so happy.
Get me more of
All
that.
right. Let's go back to your fund for a minute. So,
Sure.
you mentioned that you actually have a credit line
Correct.
with a bank.
Correct.
Okay, so
It's another private institution. Yeah.
okay, so investor capital comes in, and then you also use the institutional money, but credit line to lend to the borrower.
Correct.
Gotcha. Okay.
Correct.
You have pretty favorable terms with the bank, don't you?
The what terms? I'm sorry.
Favorable terms with the credit line?
We do. I mean, with the group that we're working with today, they're a private institution, just like ourselves, just much larger in scale. The way in which that relationship really kind of formed was about, I would say, 6.5 years ago. We were in conversations with them. I think at that time we were a little bit too small and nimble. The conversations and the relationship continued, and then eventually they started buying our loans. As they started seeing the loans performing, they started seeing loans being paid off. They saw the high quality loans that we're actually originating. They've extended an additional line to us to be able to make the loans. Now, that the good part about the relationship that we're having with them today is that they have the ability to either give us a warehouse line for us to pledge the loans, but also buy the loans. So in the event that we want to choose to sell our loans for whatever reasons, it could be that we're just not comfortable with the market coming in or coming out, or what have you. We just want to be able to reduce our exposure for our investors. We have the ability to sell those loans almost instantaneously. So although the loans that we make today, we intend to hold on our balance sheet, we have the ability to sell them as well.
And what historically have you paid to your investors in your fund?
Very good question. So we have 3 classes of shares. Today, our investors are, depending on the class of share, they're on track to hit anywhere between, I would say, 12 to about 15% returns. And that's with monthly cash flows directly deposited into the borrower's account, the investor's account.
Now, if you're, do you have equity participations with some of the loans you're making to their borrowers?
No. So thank God we don't do that. We're only pure debt players. Now, your question to me is, Ruben, how the hell are you hitting those high returns?
I'm going to take a stab at this.
Yeah,
It's because the credit line is charging you a lot less interest rate, like 8% or something, and so that's
exactly.
how
You
you.
hit it on the head. So we have that arbitrage, that delta that we're hitting. And as a result, we're able to actually capture a much higher yielding return than we are actually charging the borrower. In addition to that,
Gotcha.
when we sell our loans, and let's just kind of make the math easy, let's just say we sell our loans once a month, 12 times a year, and we capture a 2% spread. We're using this as an example on every single
Yeah.
loan, you're capturing 24%, right? 2 times 12, 2% return on every loan,
Share the
12 times a year, 24% returns.
Does the fund earn the points
So no,
being
the
charged?
points go to the originator just to kind of keep the lights on, make sure that the brokers are
Yeah,
paid, the originators are paid, the rents are paid, and what have you. But the fund is only earning the yield strips that we're
the
able to
yield.
arbitrage and delta through the other
And
mechanics that we're employing,
do you pay monthly or quarterly?
monthly returns. Now, the challenge that we're
Monthly
having
return.
today in our third-party fund administrator, Opus, they're great. Shout out to them. They're coming back to us and saying, look, you're growing in size. Your investor count is growing. Your AUM is growing. Can we please convert this over to quarterly distributions? I'm pushing them for as long as I can to make sure they're monthly distributions because our investors are already used to it.
Yeah, that's really hard to get them to suddenly go quarterly. And because I'm going to throw this out here, because you are what, a 506D fund?
506C Reg D, exactly.
Then you're a pass-through entity, and potentially clients or your investors may potentially get the benefit of Qubit.
Yes, exactly. They essentially get a K1 at the end of every year as well.
Yeah, exactly. And so they have to check with your accountants to find out if you qualify for Qubit because it's based on your income, et cetera, et cetera, et cetera. But if that's the possibility that you do qualify, then you get some tax benefits, which is kind of a nice benefit there. You said it's a 1-year hold,
Correct.
and when clients want to redeem, how long does it take generally to redeem their
Uh,
money?
I always say give us at least 2, 3 months notice. But
Okay.
some of the redemptions that we had, they were kind of expected. Some of our investors they're in transitional periods where they're investing because they're looking for other acquisitions to buy, but they just can't find anything. And there's some of our borrowers, right? Borrowers borrowing from us end up investing with us while they're in that transitional period.
Yeah,
And they
I've heard
tell
that.
us, look, this is a short-term, short-lived investment. This is just for us not to be able to hit the money in the CD and then only collect a 3 or 5% return. So they invest with us
Yeah.
kind of temporarily. So anytime in the past that an investor requested for a redemption, we were actually able to honor that redemption within a few weeks, with a month at most. But we always ask to give us at least 2, 3 months notice.
Gotcha. And let's see, when we come back, remind me to ask you the question about have you had any foreclosures?
Totally.
Because I want to find out, like how does that, how have you worked those things
Very good question.
out? Gotcha. Okay. Here's our third trivia question. What was the original color of the Eiffel Tower? Call
Good question.
888-12-1190. Yeah, I didn't realize
Can
it
I
had
have
a different color.
ChatGPT this or no?
Yeah, when we get back from break, because we want the audience to get the attention to earn or win the tanning certificate, which is worth over $100.
I
What
want one.
was the what was the original color of the Eiffel Tower? 888-912-1190. Don't touch that dial. The best of investing. We'll be right back. Welcome back to the best of investing one more time. I'm Edward Brown, your host, along with my special guest, Ruben Izgelov. Third trivia question. What was the original color of the Eiffel Tower? What's the answer?
Uh, God bless ChatGPT. Venetian red. Is that right?
Venetian red. That is, yeah, not just red, Venetian red. Good job. Okay. I'm glad you gave credit to ChatGPT for that
Totally.
one. Right. So, Ruben, how many times have you had to foreclose on a
Yeah.
property?
Yeah. That's a very good question. I mean, look, like I said earlier, we've deployed 700 million across 1,400 assets, right? 1,400 loans. It's impossible to say a foreclosure never happened. But I want to say that, out of the 1,400 loans, there's probably about 10 properties to maybe 15 properties that actually went all the way to foreclosure. Have defaults occurred? Of course. It's impossible to operate at that level with no defaults. But the good
Right.
part about where we are and the position that we're in is that we're always first lien position, collateralized by real estate, and personally guaranteed by the borrowers. In addition to that, we always want our borrowers to be aligned with us, just like we as the GPs are aligned with our investors. Our borrowers must be aligned with us. So they always have to have skin in the game. Today, the average leverage is right around 80%, which means the borrowers already have about 20% of skin in the game going into the deal. Plus, they have closing costs. Plus, they have to start the construction. So, on an average, the borrower is about 30% invested into the deal. In addition to
Gotcha.
that, the natural position of where we are, we have about 42% of equity built into the deals once the property has been repositioned. So, with all that put together, puts us as lenders in a very good position in the event that the borrower defaults. It happens. And when they do default, we just have to kind of remind them, whether it's legally or through a phone call, all those specific points. And generally speaking, within a few weeks, few months, depending on their circumstances, they usually reperform. Now, the flexibility of our fund today really enables us to be able to sell our loans almost systematically and programmatically. So today we're selling loans almost on a weekly, bi-weekly basis. So as a result, we're not really holding a lot of loans on our balance sheet because we're always constantly selling. So in the event of a default, we're still the ones servicing the loans or sub-servicing the loans. We're still the ones interfacing with the borrowers, and we always want to be able to have a very good relationship with our loan buyers. So as a result, we're always calling them and reminding them of those facts, although we're not the ones holding the loans on our balance sheet anymore, right? So as
Yeah,
a
but you're
result,
servicing spread then for
exactly,
servicing.
we're incentivized to make sure the borrowers are performing because we want to capture that servicing credit, and our investors depend on it, right? So as a result,
Yeah.
we on our balance sheet today have zero foreclosures. Very proud of that. Are there defaults? Of course, there's always defaults. Sometimes borrowers are 10 days late, 30 days late, 40 days late, but generally speaking, they reperform very quickly once you have to remind them of all those facts.
Yeah, let me kind of go back to this because you said the fund does not earn the points, but does the fund earn that servicing spread?
Totally. That is totally 100% the fund's earnings.
That's why you said if you keep flipping the money over and you
You're
keep
recycling it.
getting that's very good. Yeah, that's great that the fund actually gets the benefit
Oh,
of the
totally.
servicing. Very,
Totally.
very good. I'm not sure of how many other funds do that, the fund actually earns it rather than the operator, so to speak. So
Yeah.
I kind of like.
I'm not sure. I
Yeah,
mean, it
that's
really
cool.
depends on the fund size. It depends on the operators and the GPs. We try to be as investor friendly as possible. We're really trying to gain traction on our AUM, which has really been working very well. And especially today, majority of our money is very intimate, meaning that it's all friends and family, right? Personally, we're invested as well, but majority of it is friends and family. So we want to make sure that we're performing high yield returns to our investors while also having safety at top of mind.
Gotcha. And can you explain how we fund lend, or excuse me, we lend fund operates and what makes it different from other private debt funds?
So I think one and the most important thing is that every single decision maker here, the operators, we have been buying, selling, flipping, developing prior to actually lending and starting WeLend, right? So we were walking in the shoes of our borrowers for many, many years. We've probably flipped over 100 properties a year while we were buying properties during that time. So we know exactly what it's like to be a borrower. We know exactly what it's like to actually fix and flip a property, fix and hold a property, all the issues, all the problems that come about. So I think one of the things that we as operators, the GPs, actually bring to the table is the fact that we know exactly how to underwrite a deal. We've done plenty of it before, and we've done plenty of it while at WeLend. Prior to starting and really starting our fund, we were really brokering a lot of our deals. Then we ultimately
Yeah.
started actually co-investing with a few other groups into the deals. And the reason why we did that, Edward, is because we wanted to make sure we gained enough experience in the debt space, not in the equity space, in the debt
Yeah.
space before we actually started raising money, significant money from our friends and family. So we're very, very big believers in crawling before we walk and walking before we run. And that's exactly what we've did for many, many years before we actually launched our fund and started raising significant capital.
Yeah, I like being a lender more than I like being a landlord.
Totally, totally. I think that was what really attracted us to the space as well, is that we're able to hit equity-like returns while being in the safest part of the capital stack. You can't beat that anywhere.
Yeah. It's like I look at it, I say, I'm willing to give up the potential upside of the property going up in value for the security of knowing I get paid first. So
Edward, you
I
and
can
I,
totally
we see eye to eye.
we see eye to eye on that. Yeah. It's very similar. Pacific Private Money started this fund called Arrival Fund, and it's kind of along the same lines, but primarily they're just doing owner-occupied consumer bridge loans in this fund. You guys don't do owner-occupied consumer bridge loans. Okay,
Never.
well,
We
about that because what'll happen is you guys will probably get requests for that and say, "See, I'm sorry, we don't do that kind of deal." And I'm sure Pacific Private Money, they can help you out on that part of it.
would love
All
to
right.
send over some deals to them.
Yeah, yeah, exactly. Perfect. Okay. Audience, stay with us. The best of investing will be right back. But before we do, Ruben, how do people get a hold of you if they're interested in more information?
They could reach me directly at my cell, 917-815-1222. My email, Ruben at WeLendLLC.com. Our website, www.WeLendLLC.com, or all major social media platforms, including TikTok. And the handle there is WeLendLLC.
Perfect. Okay. So audience, don't touch that thought. We'll be back with some closing comments. Good. Yeah, very, very, yeah. It's funny you mentioned New York. I'm actually going to be in New York May 8th to the 10th.
Let's grab lunch.
Yeah.
Drinks
Well,
on me.
again, my going to have me busy the whole time there. She's going to some symposium thing, and then we're actually going to only be there for a short time. I wish we could. What part of New York are
Queens.
you in?
Queens, New York.
Queens. Okay.
Yeah, it's about
So
a 10-minute drive.
flying to JFK, but I don't know.
My
She has a
office
stay.
my office is 15 minutes away from JFK.
Oh, is that right? Well, I don't. It's funny, I don't even know where we're staying. She's. This is her trip, so I'm just kind of
Right.
joining her.
You're
this one,
joining
but-
the bandwagon. I'm with you.
Yeah, last year I had to go to Islip, but I tried to
I went
get
to
the
law
flights.
school. I went to law school in Iceland.
Right? I
Yeah.
had to fly in. I had to fly into JFK, wait 2 hours for a car, drive 70 miles.
Ugh,
But it was actually very profitable. It was good that I did
I'm
that.
into that.
Okay. We just have a few minutes left, about 3 minutes or so. What would you like to cover?
I think we've covered a lot. I think we've done a great job. Whatever it is that you want to cover, I think you hit a lot of the things that I had.
Do you have any success stories specifically, or?
Let me see what we can talk about.
Okay.
Um,
Well, let's maybe just talk about what a typical deal would look like.
why don't we talk about why we went into the debt space versus an exit of the equity space?
Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Ruben Izgelov. No trivia question, but Ruben, why did you get into the debt space instead of the equity?
It's a very good question. So, while I was in law school, and I think I was at my last semester, I got a call from, at that time, the Pitbull Conference. Today it's the NPLA Conference, the National Private Lenders Association. I actually sit on the committee of it. And I got reached out by, I think it was Leonard Rosen at the time. And he said, look, you got to come to this conference. There's a bunch of private lenders here. You need to come here to be able to get exposed to these private lenders, because if you really want to get a very good cost of capital for the deals that you're buying, selling, flipping, developing, this is the place to be. So I said, you know what? I got nothing to lose. This is right before I started studying for the bar exam. So let's go out there. We went in there as private investors and developers. We walked out as private lenders. We've never looked back since. And the main reason to that is because we've learned very quickly, while hearing some of the presenters speak, that we can hit very high attractive returns while being in the safest part of the capital stack. Being an attorney, you're trained to see the downside before you see the upside. And I think with equity plays, there's a lot of downside, right? There's a lot of things that can go wrong. There's a lot of dependencies and interdependencies, right? Here in the debt space, you're the last one into the deal, but you're the first one out. You're in the safest part of the capital stack, and you're able to hit mid-teen returns while being able to do so in a monthly cash flowing basis, passively, and it's real mail check money.
Yeah, and with like, I know Pacific Private Money has had this situation too, where the borrower may have lost money,
Totally.
but the lender didn't lose money, right?
I actually had that on a deal.
Yeah, borrower puts up 300,000 on a property worth $1 million and ends up selling it for 800,000, and they lose, but the lender still got paid a 700,000. So yeah, I'm sure you've had that kind of situation.
I
Sure.
had a deal like that in the Bronx and in Queens, right? When we were buying, selling, flipping, developing, and I went into two deals. I ended up losing money. And I reached out to my private lender and I said, look, I'm losing 50,000 on one and 40,000 on the other. And he, right, quite, naturally and politely said, Ruben, I'm not your partner. I am your lender. You're paying me
Yes.
what I'm owed, and there's no questions, ifs, ands, or buts about it. So that made me realize, like, shoot, I'm in the wrong business. Fast forward a few years later, I get a call from Leonard Rosen, who said, look, you got to come to this conference. All the blue chip lenders are here. This is where you need to be. And thankfully, I
I met.
listened to his advice.
I'm trying to remember. He had a kind of an interesting name for his uh,
Pitbull Conference.
people conference. That's what it was. Yeah, yeah, yeah. Yeah, I went to that back in 2014,
Oh, okay,
2015.
nice, 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 nice.
Son,
It was a lot smaller in scale then. We went into
yeah,
that conference in 2018. Today, it has been rebranded to the National Private Lenders Association, and it's run by John Hornick and his entire team. They've been doing an amazing job, really trying to bring in more institutional capital and an institutional feel to the private lending space.
gotcha. Okay. Well, we're definitely offline. We're going to talk about the difference of how we can help each other because
Sure,
uh, I specialize in the owner-occupied consumer bridge loans,
we
and
complement each other.
yes, exactly. All right. So, audience, here's our thoughts for the day. So, if by the way, Ruben, thank you very much for
My
for
pleasure.
joining us. Here's our thoughts for the day. If laziness was an Olympic sport, I would come in fourth place just so I wouldn't have to walk up to the podium. Thought you'd like that one. And I had a really bad day yesterday. First, my ex got run over by a bus. Then I got fired from my job as a bus driver. Yes, yes, yes. By the way, I don't have an ex. I've been married so long. I don't know if I was born
Happily
first or
married.
married. Yeah, that's right. Two kids, and
God
and
bless.
gosh, I've been married. Yeah, for 30 something years. I do remember my wedding anniversary, so my wife's
God
very happy
bless.
with. All right, audience, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.